Hi, this is Nicholas Furtak for NakedTrader.com. We're going to be talking today about S&P 500, as we expected it was going to retest the breakdown line. We're going to have Barlow World, JD Group and Tiger Brands, 3 South African listed shares as our main shares of focus today. Here we have a weekly chart on the S&P 500. Obviously our long-term uptrend line with the 40-day moving average, 40-period moving average, and we've basically, the other day we've had quite a few weeks of downtrend, and we broke down below the uptrend line. Didn't stay for long enough to say that the line has been broken. We've moved back above. Now this is a very significant area. Any good news could propel this market to retest the previous highs. Second breakdown of this line I think would be very significant, and I would become rather bearish on the market for continued down move. Spain rumored to, although we've resolved the Greek deal, we seem to be having problems once again with Spain. Rumors of a bailout. If the market takes that as in a negative way, that could be a trigger to sell off this market. So just watch this line currently around the 1400 level. Would be, breakdown and setting up a new low below 1350 would also be very bearish for longer term investors, as well as you'd be making a new basically starting a downtrend line by Dow theory. So that's very important levels to watch. But at the moment I'm staying bullish. If you've got longs, you can hold and hopefully get to the double top area here for first starters. Moving on to South African companies. Barlow World, the Caterpillar distributor in South Africa and other countries as well, reported last week a rather good set of results, but mostly supplying the mining sector, but also in automobile sales. They've got quite a lot of dealerships. Good results. We've had most of the year that we've had a downtrend in this channel. We broke out of the channel, broke back in. We've now broken out a second time with quite a significant and strong move as well. Never managed to get to the overbought area. This is probably our first pullback. For those of us who've missed it, 75, possibly a little bit better entry around the 74 mark. I'd pick them up. Definitely at the stop loss if we get to the first stop around 73. Those who have a wider stop, don't let it break back into the channel. Those who want to basically play very conservatively, wait till you dip to the channel around 71, 72 and wait for the rally off there. I don't think it's going to get there, but if it does, that could be a different opportunity. And I think this one's going to rally rather to possibly break these highs to get to these highs. Around 83, 84 is your first stop. The results were significantly better than expected, so I would look at this one as quite a decent long. JD Group, JDG is the share code. Quite a long consolidation there's quite a lot of interesting industrial changes to this conglomerate, and it's been sideways for most of the year. You can see it peaked around 52, 51, 52, bottomed around 41, so it's been in a bit of a sideways move. It's not expensive by PE standards, not too expensive, so it's one that if you get a few of the changes that they've made to this company right, and on a technical basis it's looking good, there could be some impetus for the upside. So keep an eye on this one. It's got this down channel that it's been downward trend line that it's been basically playing around with in recent months again, and it's squeezing itself out from the bottom side. So this one, a breakout, definitely if it breaks above 50, looking like a very bullish signal. And the upside is quite high, 55 to even 60 possibly. So that's an interesting one to watch. The stop loss should be around 47. Lastly, Tiger Brands, another industrial conglomerate, mostly supplying foodstuffs, growing as well throughout Africa. PE is a little bit expensive on this company. Also, recent months have been more on the sideways mark, but if you look back through the year, it's had a rather good year, from around 245 to 288 rand at the moment, so it's a reasonably good year. and it's had some quite wild dips through the year. We're looking like we're breaking out of this top of this, look at it as almost like a symmetrical triangle, and a breakout above here has got target price could be, you could take it just rather conservative, this late consolidation period from about 255 to 285, a 30 rand move. Little bit excited about it, but 305 would be the target. The true traditional way would be to take the level from here to here as your breakout target and add it to 285, but I'd rather stick it to be a bit conservative, because I don't think the market's as strong as some people perceive them to be. 315 would be an extreme target. If you're buying around here on the breakout of this strong move up to 85, take it for around 15 rand. Stop would be around 280 if it breaks below 8 rand. Stop. So it's 2-to-1 your ratio of risk reward. Not the best risk reward, but you can continue holding, cover half 300, continue holding the rest till maybe 310, 315. That's Nicholas Furtak for nakedtrader.com.